Welcome to Pimpy's Investment Chat, where we keep investment talk simple. And here's your host, Pimpy.
What is going on out there, peeps? Yes, I see a lot of my listeners are running over to Miles Franklin to purchase gold. That's good to hear. Anyways, there is another pattern that I used to speak about. People are asking how come I don't talk about it no more. Well, that's because cryptocurrencies has kind of been stagnant for a while. It just would have been boring. So let's go over that now, shall we? Before we get started, do me a favor, hit the thumbs up button. If you're not a subscriber, please do so, because when you do, it helps out the channel, and I certainly do appreciate it. If you're thinking about buying gold and silver, head on over to our friends at Miles Franklin. The link will be down below in the description. When you make your purchase, make sure you use promo code Pimpy, P-I-M-P-Y, and they'll take care of you. If you have any additional questions, you can reach us over here at this phone number or over here at this particular email. For all orders over $10,000, reach out by email and we'll make sure that you get a great deal. So come on over to Miles Franklin and add to your precious metal inventory. Okay, back in olden days when cryptos were running real hot, I used to speak about this thing called the Wykoff. It's a pattern that shows up a lot when it comes to the stock market, but it also applied very well to cryptocurrencies. And then we saw cryptocurrencies come down. And I had made the comment that this is the accumulation stage. I didn't realize the accumulation stage was going to take this long. This is Tony the Bull saying, according to the Wykoff schematic, Bitcoin is about ready to jump the creek after nearly 9 months of accumulation. Accumulation is when it just goes horizontal, stagnant. There's not a lot of growth. Now this post comes out on March the 16th of 2023. So it was about a year ago when he made this comment. The Martini guy said the same thing. This was January the 2nd, beginning of the year. Bitcoin is in the final stages of the Wykoff accumulation pattern. I drew this chart 18 months ago, and it has played out perfectly. So this is what he drew out. But when it got here on January 3rd, he kind of drew out where he thought it would go. How close was he to his accuracy? Pretty damn close. Again, he posted this on January the 2nd, which is somewhere right in here. He drew this out, and that's exactly where the market is going. So yeah, you can follow the Wykoff chart. It seems to be very accurate when it comes to Bitcoin for some reason. That's why we thought the powers that be were using the Wykoff chart to manipulate the market. I spoke about that before. I wasn't showing the chart again because it was kind of stagnant for a while. It's accumulation stage, and that eventually start popping up again. Now, just like last time, you can see when it's going to have its highs, its lows. There's going to be peaks and valleys. And if you're a really good student of the Wykoff chart and you follow it just right, you're going to know when to sell and when to buy. So Bitcoin is down to 69,393 after it hit a record high of 72,000. You'll see this happen from time to time. People would take back some of the profits and then allow the rest to continue to move forward. There's a lot of reports out there that Bitcoin and cryptos are in a bubble. That's why we're seeing this pullback. We have halving coming up. We'll see what happens to the market then. So you got Ethereum at $3,731.42. Solana still moving. Nice move on Solana. It's up 5% for the day. It's at $183.59. XRP is still at 63 cents. Cardano's at 72 cents. Dogecoin at 16 cents. Avalanche at $56.46. Shiba at 403. Polkadot's at $10.80. Chainlink's at $19.57. Polygon's at $1.13. Litecoin's at $89.70. Terra Luna is at 3016. Saitama sitting there at 20109. So for those who don't know, Saitama automatically switched all your cryptos over to SATA chain is what it is. Gold at $2,159.40 per ounce. Silver looking good. It's in the green and above the $25 mark. Sitting here at $25.40 per ounce. So here's Danella over here in ITM. She had a very special guest on. The man had a lot of things to say, covering a lot of different subjects. I wanted to go ahead and share it with you. Let's go ahead and get into this.
Look, it could happen. And if you think of ways you can break a global reserve currency system, look at the past. How have we done that? Normally with disruptive events, with wars, with a system breaking from within Think of the Roman Empire, for example. It broke from within. Think of other global reserve currencies. They basically fell because they lost a war. So there are always disruptive elements in breaking a global reserve currency. My point is, yes, it could happen. I'm not sure whether in the next 10, 20, or 50 years. But my main point is, it isn't going to be orderly. It's not going to be this fairy tale where you dethrone the dollar and everyone is happy. It will be a disastrous type of setup where the system has to implode from within. Why? We have $12 trillion of outstanding debt that has been issued from entities, countries, companies outside the US, Daniela. So they issue dollar debt, they lever up, they borrow in dollars, but they can't get their hands on dollars. They cannot unless they're selling goods, they're selling services, they're selling commodities in dollars. So what happens when the dollar appreciates and the global economy slows is that your debt that are denominated in dollars, they go up in value. So you have to pay more to service your debt. But what about your assets? What about your cash flows? If you're not selling stuff because the economy is slowing down, you're in trouble. And that's why during periods of crisis, we see the dollar appreciating.
Like I said, I didn't mean to diverge and go on this path, but how can I not ask you this now? When you say unruly, I mean, are you talking riots on the street? Are you talking, extreme poverty or, hyperinflation or super deflationary or war? I mean, what does unruly mean for you?
All these 5 possibilities are a chance because, again, you need a disruptive environment. You need something that disrupts the system from within. So it could be extreme deflation because that basically increases the value of debt. If you have deflation, the real value of your debt goes up. It could be a high inflation prolonged for a period of time, forces the Federal Reserve to raise interest rates, which again breaks the system from within. Or it could be another type of event like, we had a pandemic and then authorities came in and did fiscal deficits and reacted. What if we have a war or anything like that?
I want to get back to talking about, obviously, the volatility and the national debt. And I want to just bring up one tweet from our friend Robert Kiyosaki, author of Rich Dad, Poor Dad. He just said, debt increasing by 1 trillion every 90 days. America's sick. Prepare now. His solution is gold, silver, Bitcoin. Please take care. So 2 things I want to hone in on here. One, I want to know your thoughts on, do you agree with the statement that America's system is broken, that America is sick? And 2, I want to know your solutions for the current monetary environment we find ourselves in. So 1, is America truly sick, Alf?
The answer is no. America isn't sick. I think America is very productive, is one of the economies that is the center of excellence for technological production, for example. Think of artificial intelligence right now, for instance. But the policymaking mix that we are applying right now is completely irrational and very risky. So this permanent use of fiscal deficits, which seems to be this easy win for politicians, Daniela. They think, let's throw money at the economy year after year. Let's win elections this way. This is very risky. But structurally, the US economy is pretty sound. It's productive. Americans are hard workers and companies are productive. I mean, think of artificial intelligence. Think of all the tech companies that were founded in the US. But if we keep applying this policy-making mix that is very risky and irresponsible, this could ruin the entire texture of the US productive system. It's full animal spirits. When it's full animal spirits, you're supposed to be more careful.
Well, let's talk a little bit more on that, animal spirits and the run in Bitcoin. I mean, the ETF seems it has opened the floodgate here for the price action in the US, now news coming out of the UK. I want to get your thoughts about the rush into Bitcoin, obviously making all-time highs here, Alf.
Yeah, it's a great expression of animal spirits, Daniela. So what's happening is that the market is looking at stuff like 1995 or 2007 or 1999. They're looking at a situation where the Federal Reserve has raised rates. And also in 1999 and 2007, interest rates were over 5%, like today. The Fed has raised rates, but the economy seems to be able to handle it. So people are like, whoa, let's go. Something has changed. I can now put risk at work. I feel more confident. And they're looking at their neighbors getting richer. This is a concept that they're looking at something I would call the neighbor tracking error. So tracking error is this concept in finance where, you're tracking the benchmark, but there is an error, and you are now having a neighbor tracking error. Your neighbor has Nvidia, your neighbor has other AI-driven stocks, he has Bitcoin, you don't. So what? So you're going to chase him. You're going to feel poor, and you want to chase what your neighbor is doing, right? And everybody's piling into the same animal spirits behavior, even if they have an alternative. They have an alternative. It's 5% risk-free interest rates. Nobody cares. So this is animal spirits.
How about in the gold market? I mean, obviously, also making new highs. So silver as well. But your take on gold?
Yeah, I mean, I like gold more from let's say a monetary perspective than I like Bitcoin. Right. I have a valuation framework on gold, Daniela, and what I do is the following. Look, gold for centuries has been considered an alternative, a coexistent alternative to fiat money. Okay, so then, how do I value the price of gold? Is $2,000 enough, or is $2,500 the fair price for gold? So what I do is I take all the gold on Earth. okay? And I apply the price of gold on top of it. So I calculate the market capitalization of the gold market. How much is the gold market worth and value today? The answer is about $7 trillion as we speak, okay? That's price of gold times the amount of gold on Earth. It's worth about $7 trillion. Should it be worth more or less, Daniela? Well, it's pretty simple. How does that $7 trillion worth of gold compare to the amount of fiat spendable money in the system? How much fiat money is out there in the 5 largest economies in the world? And the answer is $35 to $40 trillion. So the valuation of gold is about 20% of the valuation of the fiat money in existence in the 5 largest economies in the world. And if you look at this ratio, it has always been around 20%. Investors have always valued gold as a good alternative to fiat money, priced at about 20% of the fiat money in existence in the 5 largest economies in the world. If you do that math today, the price of the fair value of gold is about $22,000 to $23,000 per ounce. Now, wait a second. If you do 20% of the fiat money in existence, the fiat money in existence goes up over time and up and up and up. We print every time new money, right? We make new debt, we print new money. So if this denominator goes up over time, then also the price of gold will climb over time to maintain this 20% ratio that I calculated. So basically in 5 years from now, the fair value of gold, if we keep printing fiat money, won't be 2,200 anymore. It will be 3,000 and so on and so forth and so on and so forth. That's why gold appreciates over time, because it's a hard asset that is priced as an alternative to this fiat money that we keep printing over time.
Right. So you just made a bullish case for gold.
Over time, yes. If you're a patient investor and you are looking 5 to 10 years ahead, gold shouldn't be the only thing you own in a portfolio, because gold does not produce cash flows. Right? There will be certain type of stock investments that are solid companies, not leveraged. They are reliable. They have good business models, and they will produce cash flows over time. But gold deserves a role in a portfolio because not only it has this property of being priced as an alternative to fiat money, and it appreciates over time, but it's also a hedge. Because if ever this fiat money system gets challenged, gold is in the primary position to be the new monetary reference asset because it already sits at the epicenter of our system. All the largest central banks in the world own gold. All the largest governments in the world own gold. So it will play that role again.
And we just saw more China buying, right?
Well, I mean, I think China has just looked at what happened to Russia, to be frank, with their reserves in 2021, I think. Yeah. So, I mean, 2022. So what would you do? Like if you have accumulated, like China, a large amount of foreign reserve assets because you have sold your goods and your services and your commodities, what would you do? Would you keep them all in bonds, or would you also buy some gold? I would.
No, absolutely. Gold. Absolutely. I think that the numbers are actually even higher than what they're showing, Alf.
Yeah, I mean, if you look at what China has done with their reserves, a lot of countries have them in bonds, but China has been a bit smarter. They have a portion in bonds, but they also have invested in hard assets in other countries. For example, they've invested a ton of money in real estate projects in Africa or in other continents, in other countries. So they've invested in hard assets in other countries, and probably they own more gold than they state.
Danella is one of my favorite, that's for sure. I got to figure out where Lynette went. Anyways, you heard what the guy's saying. You must have gold. It's a must. So when the market collapses, you're prepared. And if you're thinking about buying gold and silver, head on over to our friends at Miles Franklin. Or you can give them a call at 844-874-6797. Tell them Pimpy sent you. For orders over 10,000, or if you just got general questions, use that email right there, and we will work you out a better offer than what's on the website. Anyways, that's it for now. Look forward to your comments. I will catch you later. I'm out.